Hi, this is Nilus Mattive for Money and Markets TV. Last week, I told you about a long-time dividend recommendation of mine, one that embodied many of the characteristics that make conservative income stocks such strong wealth builders. Today, I want to talk about another textbook dividend play, only this one summarizes nearly everything I love about foreign income shares. I first recommended National Grid Utility for my dad's income portfolio almost a year ago. Since then, it has beaten the market by 37% and given my subscribers a very solid return. In fact, this UK-based power provider handed my dad a 6.3% return in just his first 6 days of ownership, and he's now sitting on a total return of 31.7%. That's 30 times what his original $100,000 would have earned him sitting in cash. Most of that gain has come from pure capital appreciation. National Grid stock has risen more than 29% since last August, nearly 8 percentage points better than the S&P 500. That's a pretty amazing return for a very conservative company in one of the worst performing sectors of the market so far this year. And it's proof that careful stock selection, even in so-called boring sectors like utilities, can produce superior results. But we haven't even talked about National Grid's dividend payout yet. My dad has only collected one dividend so far because the company only pays out twice a year, and I expect future payments to boost his overall return substantially. Moreover, the beauty of buying foreign dividend stocks is that you can benefit from any negative moves in the US dollar. If the dollar declines against the currency in which the stock is denominated, any moves in the share price will be exaggerated. Plus, dividend payments will represent more dollars once they're translated from the company's home currency. Remember, since you're essentially buying a foreign company, everything related to your holding is originally priced in some foreign currency. With National Grid, it's the British pound. So if the pound strengthens against the dollar, you get what I like to call a currency kicker. Obviously, the opposite can also be true if the dollar rises against the pound. But so far, the currency relationship has worked in our favor. Plus, I think it's important to diversify your portfolio into other economies anyway, since the overall effect will be a greater level of overall safety. National Grid is a perfect example of what to look for in foreign income stocks. It's a conservative, high-quality company with a solid business that does well in good times and bad. It has a great dividend history. Its current yield is well above average. It was being undervalued by the market when I recommended it, and its home currency looked likely to strengthen against the US dollar. But as much as I like National Grid as a long-term holding, and as much upside as I think it still has, it's far from my favorite foreign dividend stock now. We have several more in Dad's income portfolio, most of which are doing pretty darn well while staying very conservative. We've been slowly building up our individual stock positions, keeping a very healthy dose of cash, and waiting for other opportunities to present themselves. Meanwhile, we've already closed out 2 other trades with book total returns, including commissions, of 32.5% and 38.4% respectively. So again, it really is possible to get far better income now than you'd be receiving from more traditional sources. It just takes a little knowledge and some careful planning. I'm Nilus Mattive for Money and Markets TV. Thanks for watching.